Welcome, everyone. It's the Crypto Lark. Very excited to have on today Mav and Doc from Ready, Set, Crypto. This is your
Hey,
brain on blockchain.
hey, that's my line.
Super excited to have both of you guys on. So thank you so much for taking the time
Yeah.
to come and have a chat with us today. Now we're going to be going through all kinds of fun, different topics. We're going to be talking about the markets and trading and some of the big macro events happening in crypto land right now, and we'll see where else we get in the conversation. Now, guys, let's start off with one thing before we actually jump into the first question. Just if anybody wants to get some more information about Ready Set Crypto, they actually do a Monday to Friday newsletter as well, so you guys can check that out. There will link to that down below, and also follow them over on YouTube. They've got an excellent channel doing all kinds of
Yep.
awesome content all the time. So make sure to check those links out to be in the description and in the comment section. So, guys, what are you feeling on the market these days?
Take it away, Doc.
I think we're range bound right now between 8,000, like talking about Bitcoin, right? Because there's really nothing else to follow this point, but we're stuck between 8,000 and about 9,100. And I think it's going to stay in that range until it builds up enough gas to maybe punch through the downside to that, because like any other market, if you want it to go higher, you've got to go down first. So one step back, two steps forward. We got to get that sort of negativity built up to create that toxic condition that leads to a short squeeze. Right now, it's not showing it. It's building more of a bear flag than anything else.
That sentiment, it's so interesting because you see people, and when Bitcoin's booming and it's up at $20,000, everyone's, gosh, I have to buy Bitcoin now. And when it's down at $3,000 like it was, nobody wants to buy Bitcoin anymore. It's quite funny. You have to be so counterintuitive in the markets, and that's why most people fail, is because they follow the herd. They can't think counterintuitively to the herd.
Yeah, most people think that markets are rational and logical, and they're exactly the opposite, because most people are actually irrational. So look at most of the decisions that you've made when the heat was on, and you'll find that most of the time your decisions in the live market are irrational. And when you multiply that by millions of participants, this is why markets don't seem to make any sense in the way that they move. So over time, you have to learn to think backwards to be successful.
Very interesting, isn't it? Now, I agree. I agree on that. I'll be curious to see if we do go further on the downside or not. But I feel like sentiment right now is getting pretty bad. And when you see those kind of situations, not exactly positive. No one's running around going, "This is the new paradigm of money" and all that fun stuff. So, in this kind of a market, what's your advice for traders?
Actually, the best trades that we're doing right now is waiting for the big plunges, and we're selling puts into those. So there's some brand new derivatives players that are in the space, and this allows us to use options to be able to sell. So you don't have to be right. You can, if you think about the probabilities of a position, if you're going to go long, you've only got a 33% chance of getting it right, whether you're trading spot or futures. But if you sell options, you can actually be right more than 68% of the time. So regardless of the way that the price moves, as long as it doesn't go down real hard, you can still win a trade that's actually going against you.
It's like going from being the gambler to being the casino. The odds are in your favor.
Yeah, you put the odds in your favor when you do that. So, and this is very new to this space. There's not a whole lot of people that are out there talking about options, but options that have been in play in the equity markets for the last 40, 50 years. And so we're just now starting to get some of the advantages of those to the retail space. You have to be creative about it.
And where's a good place to be playing those kind of options? I know the CME announced they were going to be doing options, but that's not until 2020.
Yeah, and a lot of these big players in the US are institutional only, like as we found out about Backed. Backed is institutional only. You can't go onto their website and sign up as a retail trader. So you have to wait to get a backdoor connection in through one of the major brokers so you can trade Backed, which doesn't help them, doesn't help anybody here.
Pun
But
intended.
right. So that's part of the problem is right now the exchanges are the retail interface for this. We have a very unusual situation right now. So your options are limited to something like a Deribit or even Ledger X in the United States.
That's right, because LedgerX did open up for retail, which was pretty cool. I thought of them.
Yeah, so we've had a lot of futures brokers out there through the year. I mean, of course, CME and CBOE were the first ones out there. Actually, no, I take that back. BitMEX was really the first big player in the space. But we've, in 2019, has seen just a whole pantload of futures players like the BEX Plus and the Prime XBT and the BYBITs and everybody like that coming along. And I think what's going to be next here is when people realize the margin that's available on options, there's going to be a lot of secondary players coming along on options too. Derivatives are really the space for retail. Derivatives are where retail has more of an edge to be able to trade, and it's not going to be in spot.
Pretty cool. Now, what is your advice for anyone who's doing leveraged or margin trading? Because I know there's a lot of people out there who have been getting into it and are new to it. So, what would be your one piece of advice be to anyone who's looking into that?
First of all, try your strategy out through a spot interface. Don't use leverage until you get a strategy that works for you. And do it on paper first, right? Don't learn with live capital. Learn on paper, learn through something like a testnet interface or things like that.
Otherwise,
right?
invest in brown pants.
Yeah. And I would say the second thing past that is never place a position without understanding what your exit is. Mm-hmm. And try to, and this is not a very popular piece of advice, but try to limit the risk to your account to 2% per trade. This is a very standard recommendation, but it's one because if you look at the main thing that affects retail traders, the reason why they blow out accounts is they don't have a stop and they're using the entire account on every trade. And so it looks great when they get a home run, but over time, they will blow out their account, or they're going to use liquidation as a stop, which I think is a terrible idea.
Yeah, you just lose all your money. Goodbye, money. That's really good advice. You know, it's yeah, you have to be careful on margin, guys, and it's play small. You know, and like you said, about 2% of your portfolio or the money you're playing with, but also low leverage, I think, is really key for anyone who's just getting involved. You know, just don't go 100x. That's crazy gambling. You may as well go down and put money on the roulette wheel. You know, it's
really your objective right now. I mean, if somebody is asking that question, like how do I get started, then your objective is not to make money right now. Your objective is to learn how to trade. If you learn how to trade and if you learn how to risk manage, then the money will come over time. Don't worry about making money right now. Learn how to trade first.
Learn how to trade. There will always be opportunities. I think that's one thing that people kind of get a bit hung up on, like, oh, but I'm gonna miss out on. Like, no. Every single day there is an opportunity. You just have to be patient, and until you know how to drive, you shouldn't be driving on the road.
That is so true.
Well said. Yeah.
Now, I want to get into some more about this recent pullback that we've seen. So obviously there's been a lot of speculation about why it happened. I mean, from just the basic technicals of, well, you know, we had the situation, it's broke down, we saw volume falling off, et cetera. Or do you think that the external events had a bigger impact, you know, backed and all this stuff that was going on, or are they linked?
Well, first off, I think we have to stress to people that still year to date, the large caps, the top 20, are still up an aggregate of 20%, with Bitcoin up 126% year to date. We just finished up Q3, so we're moving into the final leg of the year. But even still, there's a 149% delta between the yearly low of 330.55 on February 8th and 1,300, almost 1,400 on June 26th. So really, this past quarter has just been defined. Just downward with a couple spikes to the upside. There's about 3 or so, but otherwise it's been. I think we're about 30% down for the 3-month average on Bitcoin, and it's Bitcoin's market, so you know that's about as good as you get for the large caps. What is driving this is a great question, and I think you have to look even more broader than just backed or the lack of volume in the space. You have to look at the larger markets and the bigger trends. For one, you can pretty strongly inversely correlate right now the Google searches for trade war versus the S&P 500. Right now, the trade war has just kind of put on the pause button as protests in Hong Kong escalate, and as politics are starting to heat up here in the U.S., it's just kind of on the wayside. That was kind of the prevailing rhetoric throughout September. When that happens, when people feel more optimistic about the larger, broader markets, they stop getting interested in speculative assets like Bitcoin and the rest of the crypto space. So it's unfortunately that's the case. We saw the inverse of that back at the beginning of this quarter when there were tons of fears of a recession. You have the yield curve inversion, you have trade war escalation, and that's when we saw precious metals and Bitcoin just absolutely dominate. That was a great time to be in this space and seeing it blow up, even if it was just for a week or so at a time. But even still, like this is, I think, where we are right now. We're in a very different environment than we were in 2017, where the larger markets were sort of petering off, looking like we were about to start a recession, or there was just fears in the market. And that was when a lot of volume, a lot of money came into the crypto space right at the right time for the ICO bubble to expand and then pop. But that was what was partially driving that at the time. And I think a lot of people kind of missed that. So we are unfortunately just the small fish right now in a much bigger pond. And we're unfortunately gonna have to continue to be, subject to that. But the good part is the silver lining to all of this is that whatever the broader markets have to lose, we have to gain as a hedge against that. And I think that's been something that's definitely come up as sort of this title or way of looking at Bitcoin in the crypto space is as a hedge against global monetary policy, central bank race to the bottom, quantitative easing all over the place, money printing and negative interest rates, and a lot of fears going on right now. So that's kind of where we are right now. But I think we can also look into the crypto space and see things like backed and just some disappointment, and there's just not much going on right now. So yeah, we definitely need to get that fire again. We need to get some juice in the space. We need to get some more interest in the space, and I'm hoping that we'll see that throughout the rest of 2019, going into 2020. But we'll see. It's definitely been quiet.
Part of me feels like the halving is going to be that big, the next big date on the calendar.
Perhaps.
Really, I mean, the Litecoin halving did, and everybody's all excited about that early. Oh, Litecoin halving's coming, and then that's coming, and then neither of those events actually ended up being very exciting, as
because they're priced in.
They were priced in, of course. They get priced in. So that's an interesting question for you guys. Do you think that Bitcoin's priced in for the halving yet?
Partially, but also no. I think we're still. We're what 7 months away, and it's still anyone's game at this point. I think it's definitely a smart move to anticipate that, but also don't put all your eggs in one basket in terms of expectations. We'll see. I don't know. A lot can happen between now and then, more than just that event in it of itself.
Yeah, Doc, what do you think?
Well, I have a little bit different take on a lot of things. So I tend not to look at the fundamentals, because the fundamentals through most of what we see are generally priced in. What I look at is markets are sort of an organism that's generated through sentiment, right? So if we look at some of the big moves that we've had recently, when did they happen? So like the April move that started off, why was that one so big? It's really this toxic combination that happened with way too much negativity as well as some positive momentum. You put those two together and all of a sudden you get a massive move. Now, why didn't we break out to the upside after all this consolidation? There was way too much anticipation for an upside breakout, right? Not enough negativity. And we just didn't have the right combination. So this is why I was saying like a month ago, like, I think we're going to break down from here. And so what I'm looking for now on the upside, to get an upside move for this, we got to get back to that sort of toxic combination of way too much skepticism, negativity, all the bad articles coming out of Cointelegraph and everything like that, as well as rising short interest, you got to get way too many people on the wrong side of the ledger and then shift the rug. And that's when we get the big moves.
Very, very interesting. I'll be very curious to see how it plays out moving into that event next year. And yeah,
What do you think, Lark?
I don't like to see the suffering happen. That's what I think. You know, not on a personal level. It's just that I know that it hurts people out there to see this happening, and you know, there's enough people who get into the space, they're new and all this stuff. But yeah, anyway, long term, I've had the opinion I've always had is that, you know, Bitcoin's just like this insane investment opportunity, and you know where we're going to be in 5 or 10 years, which is where I'm looking. I'm looking at the long term, like not what's going to happen tomorrow or next week. And you know, you can play that obviously sometimes on trading, but in terms of where is my investment going to go in the long term, that's where I look. But coming into the halving, I don't know if we're going to see massive amounts of price action. Like I know there's some people who say, "Oh, we're going to see the new all-time high before the halving." I have my doubts about that personally. If we look at we look at how the previous halving played out, not to say that that's what's going to necessarily happen going forward this time, but we saw the previous halving kind of play out in a way that we did see some price action, but it didn't break above the previous all-time high. So I would imagine that, yeah, we're probably, if we follow the trends, we're looking to a year to a year and a half after the halving before we see the new peaks.
I think what people often miss in the conversation about the halving or however you pronounce it,
The happening
is that it's not just about the special day where, you know, it gets cut in half. There's going to be some volatility regardless of how much is priced in or not during that day, and that's exciting. And it's cool to look forward to that and be like, all right, cool, we can plan around this or whatever. I can trade this. What's more important to me, at least from a fundamental investor perspective, is that the supply of a by definition deflationary asset is going in half. We are literally going to see the inflation schedule of the first real digital asset out there undercut many of the world's currencies for the first time. And that's kind of interesting to see, especially in a time where we're seeing interest rates being played with, trending towards zero, if not negative. That to me, so the larger perspective here is the longer time frame. That's what's important here, is that it's going to enforce and reinforce price to go up long term, even if there's, you know, massive spikes in volatility. But what's interesting, even if you look at the data, even if you look at the short-term drops like we just saw, every time that Bitcoin drops at least 10% within 30 days on average, it will go up 11% following that. Whereas if that didn't happen, on average, it trends about 8%. So Bitcoin, by design, as Doc just mentioned, it trades very much like an organism. It's there and it's moving all the time. It's a very active, volatile asset, but at the same time, it trends to the upside on many different time frames. So that's, I think we have to continue to look at this as, it's not just a singular event. It's a progress. It's a march towards progress. It's a march towards innovation. To me, I see Bitcoin as an investment in the future. So much more than just a hedge against global chaos and you know, trying to you know, build a better system. It's also just part of something that I think is being built now, even if we can't see how all of the roads play out just yet.
Yeah, I mean, there's so many parallels you can draw with the early internet days, where it's the people who were, you know, switched on, like, wow, this is really exciting. We don't know where it's going to go and what's going to be possible, but it's incredibly exciting to see it all playing out. And I'm totally with you as well. I mean, Bitcoin's got so many different facets because of its many different properties. I mean, yeah, okay, it's a great hedge against, you know, political instability. It's great for, you know, censorship resistance and all this stuff. But at the same time, like that vision, that's all bonus stuff. I look at that stuff, that's great. I'll take that too, right? But it's I look at it as potentially the native money of the internet moving forward, and that's crazy. Yeah.
Now, there's. Go ahead.
I want to get you guys' thoughts on kind of what's been going on Wall Street recently. We've had this thing with the overnight repo market, which is just this, until about 2 weeks ago, is this totally obscure thing that, you know, basically no one knew about it. I didn't know about it until about 2 weeks ago, and then I got kind of dug into it, and basically that's at the end of the trading days every day, banks put up bonds and securities for basically the overnight repurchasing market. So now that dried up for some reason, and about 2 weeks ago we saw the standard kind of rate of around 2.3%, I think, bump up to 10%, and there became an immediate, very large liquidity crisis in the overnight markets. So what are you guys' thoughts on this? Is this just an anomaly that's happening, or is this potentially that canary in the coal mine situation that's indicative of something much larger and more rotten happening?
It's always something like that. It's always something from left field that people don't anticipate. So I remember back in 2007 when markets started to get a little bit rotten from the inside. One of the first things that blew up was the carry trade, where people would, buy one currency and then hedge off against another currency and do their trades in the other currency and then use the interest rate between the two. And all of a sudden, when that inverted, all of a sudden people were like screaming to get out, and it's always that issue. So there's always something strange like that. Financial markets are so deep and so obscure in ways that people try to get edge in them that there's always some risk of something blowing up like that. So I'm not surprised.
Yeah, I think even if we've seen sort of a glimmer of optimism in the larger markets over the past month, regarding, oh, well, things are fine, we're moving back towards risk assets, we're cool. I don't know. It also reminds me a lot of 2007, where there was just this rhetoric of almost doubling down on a system that was inherently rotten from the inside, and it needed time to correct itself and get back on track. So I don't know. There's a lot of this talk of recession and things blowing up and all this sort of stuff, and we've certainly seen over the last 2 years that the market is really good at sort of assuaging those fears, or at least mitigating them through continued upside. So I don't know where this all goes or how it's going to shake out. I've heard opinions that we're past the days of just catastrophic, like market crashes, and things are just so arbitrated now that it's not going to shake out like that. It's going to be a slow bleed instead. And I don't know. There's so many different ways it can go that it's interesting to think about, or try to prepare for. But I don't know how to adequately anticipate that when there's so many different ways it can go.
Yeah, it's very deep and complex, and I feel like Wall Street kind of likes to make things extra deep and complex so that no one really has any idea at any point what's going on. Not even the regulators can keep an eye on them. I think so, like the rehypothecation of the treasury bonds, for example, it's so convoluted and incestuous, and the regulators have no idea who's got what. And this is the thing, these things are being rehypothecated 2 or 3 times or more. On average, I think it's around 3 times. So that for anyone who doesn't know what that is, basically you got one bond and 3 people are pretending like they own it, but only one of them actually owns it. And it's a crazy situation. And so I've seen there's already been talk that that 65, 75, whatever billion a day that they're kind of putting up for the liquidity in the repo markets may become a permanent blank check to Wall Street to provide continual liquidity, which is unfortunate. Back in 2008, the big banks, the biggest takeaway from that is that they said, well, we're too big to fail. So now, going forward at any situation, they just go and say, hey, you guys already know, we already had this conversation, just give us the money. And that's kind of what happened the other day, is there wasn't even a conversation. Oh, should we just give them the money? Whatever, who cares? No one even knows about this stuff anyway, and then the media's not going to talk about it.
You just have to shake your head.
Yeah, you just have to shake your head. Anyway, let's move on to a more exciting topic, altcoins. So, what altcoins do you find most interesting at the moment?
Is none of them an answer?
None of them can be an answer. Now, is that just from a trading perspective, or is that from a perspective of you're not interested in any of the technologies or anything like that, or the fundamentals of any of the coins?
from a trading perspective, I think we have to be cognizant of the fact that year to date, mid caps and small caps are down about 30% on average, which is, given that I just talked about how large caps were up almost 70%. It's kind of hard to justify, having a well-diversified portfolio when the only things doing well are the well-established coins that have the volume, have the presence on multiple exchanges and things like that. As I was saying earlier, we're in a different market right now, a different space that's more defined by maturity. If you've read Chris Burdinsky's book about sort of how do you value things like Bitcoin, he talks about the difference between speculative value and utility value. And right now we've seen a market that is much more defined by utility value, what these coins can do, how they do them, the presence they have as a platform, things like that, rather than the speculative value. The speculative value is still there somewhat, but the market's much more concerned about what it is that they can do, where's the project going, what is it produced, things like that. So it's not to say that I'm against altcoins or I'll never trade them ever again. I think it's just important for us to make sure that people understand that it's just not their market right now. When that changes, yeah, absolutely. I'd love to get back to 2017 was crazy in so many different ways, both from a price perspective, but also just from like an excitement, energy, development perspective. So it's like holding two opposing beliefs where it's like I'm conflicted about what happened with the price and how the ICO just really got away from itself in terms of a capital formation vehicle, but at the same time, it brought about a lot of really interesting developments, a lot of interesting experiments, really, that, some of them were fake, a lot of them were fake. A lot of them
far too many, unfortunately.
Right. So we do have to be beholden to that, unfortunately. But at the same time, it spawned so much enthusiasm and belief in technology and where things are going with like the future of the internet and the larger digital economy that we're seeing the very beginnings of right now. So it's so conflicting. And at the same time, everybody does want to talk about, okay, are we ever going to get back to altcoin season? Are we ever going to get back to this runaway bull market that just, this time it's going to be even bigger, electric boogaloo time, whatever.
No, it's interesting too. I think that we've seen so many more platforms come in that offer people the ability to simply trade, margin Bitcoin and stuff like this, long short it and all this fun stuff. And that, I think, has also gone a little way towards reducing, because people see altcoins are going down because of failed delivery, failed market fit, and all this 101 reasons why different altcoins have failed for one reason or another. But people just realize, well, I don't need to gamble in the altcoin casino necessarily. I can go and play this other stuff. And I still think that there's some really great altcoins out there that make potentially very good long-term holds, but they're fewer and farther between, without a doubt. Doc, what do you think?
Well, I just did a presentation for our insiders 2 weeks ago and showed them how to build an entire diversified portfolio around one asset, which was, of course, Bitcoin. I mean, there's so many things that you can do with Bitcoin that you can diversify through strategy and not necessarily just the price, right? The modern portfolio theory, which is actually really, really old, is this notion of, well, if I multiply the expected returns by this basket versus this basket versus this basket, well, that doesn't work if all of those baskets are going down in price, right? So what you have to do is you have to use a different methodology for this. So you can do things like, again, sell puts against Bitcoin or sell calls against it, or rent out your assets through options. You can look to scalp intraday moves. You can, of course, dollar cost average either through strategy or time. There's so many things that you can do around just one coin that, you don't have to be looking for a needle in a haystack. And I think that is the notion that has all been programmed into us through all of these TV commercials that we watched over the years that, oh, we give you the research to find that one stock that nobody else knows about.
Mm-hmm.
But good Lord, I mean, there's billions spent on Wall Street for research and things like that. And we think that, oh, because I have a Fidelity account, I'm going to find something that nobody else has. So we're embedded with this sort of false notion of finding a needle in the haystack, and that carried over to the altcoin market, and it sent people down the wrong road for 2017. I see exactly the same forest fire analogy from what happened to the NASDAQ for almost 10 years. So the NASDAQ didn't recover for almost 10 years after the crash in '02 finished off, before it started to build up, some undergrowth that sprouted out the price lines and the Amazons and so forth of that. Now, crypto is probably about 10 times faster. I don't think we're going to have to wait 10 years for the right projects to sprout out. But for right now, you don't have to be looking all over the place for things that you can trade.
That's right. That's right. Now, one very exciting thing that happened earlier this year was the IEO boom, the initial exchange offering boom. We had a lot of projects who during 2017, during 2018, they did their private sales, and they didn't go to market. They didn't do public ICOs because the market conditions were so rough. And then all of a sudden, Binance decided to bring back in. They actually had done this way back in 2017 before the Chinese authorities came down on them. But to bring back in their initial exchange offering model. And that became very, very popular, and insane returns were being made. And then everybody got in on the party. KuCoin and Bittrex and BitMax and every other exchange in town basically started offering initial exchange offerings, which let your retail investor come in and invest in these new startup cryptos, if you will. And a lot of money was made very, very quickly. And I feel like right along with the rest of the market, that's completely dried up, and that IEO boom is basically completely finished. The last IEO on Binance only came out with a 50% profit for people who got in, which is, pretty gosh darn good by anyone's books, but that's Binance. Binance has remained an exception. A lot of other platforms have seen IEOs come out and people immediately lose money, significant amounts of money. And so do you guys think the IEO boom has dried up? Do you think we will see another IEO boom, or is it time for the STO boom?
There you go.
STOs.
So yeah, I've been a big proponent of STOs, and I'll get to that in a sec. I think it's important for us to recognize what the IEO really was. It is an ICO, just with a different wrapper. I actually kind of wish that we saw them back in 2017. I think that would have been a lot better than the projects that just kind of fundraised by themselves and then went off into oblivion and had a party on a beach or something like that. Whatever. IEOs were, I think, by design, just trying to drive market interest in platforms, exchanges like Binance and KuCoin, who I think can see the writing on the wall in terms of where the space is going and where the larger startup fundraising trend is going towards, which is to bigger platforms, more institutionalization. I'm not saying that Binance is going to be out of the job in 2 years, but I am saying that they're going to be it's going to be a lot harder for them to compete. They're not going to have the dominance that they have today. They're already kind of seeing that happen, but whatever. So an IEO as a fundraising vehicle wasn't bad. In fact, I think it was better than the ICO, marginally so. But at the same time, you're still asking the same questions. What's the utility of the coin? What's the project horizon here? Or what are they going to use the funds for? That sort of thing. And I just didn't see that sort of questions being asked. All I saw was, what price can I get in and what price can I get out of?
Yeah.
It's the same stuff. So I think that's a good segue into what STOs represent. And what potentially STEOs represent, which is the future of capital formation in this space, just from the perspective of more legitimate, more regulated, and by design, just a better vehicle for investor protection, investor rights, just getting part of something without the fear that they're just going to exit scam or whatever. It's not going to protect you from bad investments, but it's going to be a better vehicle for protecting you against scams and things like that. So anyways, what I see happening right now with SDOs and where I think the space needs to go is it's going to take time. It's going to take years, unfortunately, for just the technology, the regulatory oversight to mature to the point where it can facilitate what's going on. But what's exciting about it is that it's not doing anything new. That's something I have to stress to people over and over again, is that they're not some huge advancement in technology and ways to do things. It's really just taking a paper process and making it digital. And every time we've ever done that in human history, it's led to some efficiencies and cost reductions and things like that. Right now, to do private equity fundraising and things like that, you got to go get a lawyer. You got to do all this. It's very
incredibly
tedious
expensive, and more importantly, retail investors are almost always on the outside of this stuff.
Yeah, absolutely, and it's by design, because that's just how it goes. That's the the status quo today. And there's no such thing as a secondary market for private equity. To do a buyer seller transaction, you need to have a fund manager and a lawyer and lots of crossing check boxes and things like that. It's just it's not exactly, there's no fluidity in terms of enabling that. And so that's not good for things like private assets. It's not good for private equity. This would be opening up private equity to having more of a global fundraising pool, a global liquidity pool available. So it's very exciting for the potentials of that, because private equity is I think I wouldn't say untapped, but it's not matured yet to the point where it could be with technology assisting it. So that's really exciting, not just for the potential of fundraising and getting behind projects again, because that was kind of fun to be able to, as an investor, take a chance on something and see if it could peter out or whatever.
Yeah.
But also as a project team, as someone who had like a dream, and to say, go directly to investors and say, I have a dream, help me make that happen. That was, I think, the one saving grace of ICOs, is that it did that in a way that we've never seen before. It was good and bad. The bar was so low you could trip over it. But at the same time, like, the early days of the ICO were amazing in terms of the ability to just go out and say, help me build this. And that was just so cool. So I think we'll get back to that just in a more regulated vehicle. It's going to take time, but it's important that we get it right. And when we get it right, it's going to serve as the bridge to the space. That's the same thing I see with DeFi going on right now too. It's the bridge between centralization and decentralization. STOs are centralized. I hope people know that, but that's okay, because it's acting as an arbiter to the land of decentralization and giving people the aspects of best of both worlds of centralization and decentralization. And that, to me, is the future. The next 10 years of the space is exploring those sorts of options, hybrid solutions like that. So anyways, I always get on my soapboxes when I talk about this stuff. It gets so exciting.
It's all a spectrum, there's the centralization, decentralization stuff, and I'm very excited about SDOs too. I think they're going to bring a whole level of professionalization to the space to hopefully end up meaning that a lot less people get burnt when investing in these new sales. Doc, do you want to come in on this?
Oh, this is Mav's. I mean, this is his thing, man.
Hey,
everybody's got their thing.
Let me ask you guys a question. We'll wrap up on this one. What crypto products or services, maybe what's your favorite one that you've been using recently? I know we talk, people talk a lot about decentralized finance and all that fun stuff. So what is maybe just one or two products that, or services that you've been using that, are crypto, not just an exchange or something? What have you been using that, and why do you like it?
That's a good question. I'm gonna have to think about this. I mean, at the end of the day, I like protecting my assets, pun intended, maybe. So I'm a big proponent of security and looking for different ways to go about that. So I just sat down with the guys behind Exodus. I love that it's a multi-wallet software wallet.
Big fan of Exodus here on the channel.
Yeah, and they're really cool guys behind that too. I also sat down with the guys behind CryptoKitties, which they just signed some big deal or something like that. That was really cool. I haven't used CryptoKitties or a lot of the what is it, non-fungible assets, that
Yep.
stuff. Yeah, I think it's interesting. I think there's a potential there, but I don't know. It's not for me. But yeah, I don't know. I also just really appreciate a lot of, like you said, what's going on in the DeFi space right now. I love the ability, just from a conceptual perspective, to be able to like get some to open up a collateralized position, lend it out on Compound. You know, got Uniswap there.
Yeah.
It's like you've basically taken all the functions of a retail bank and like given them to the world.
That's it.
That's
made it
so
made
cool.
it trustless, made it decentralized. It's very exciting.
Yeah, yeah. It's also like there's really scary implications of that. That's what people kept talking about at Consensus this year is like, you don't want to give a loan to everybody, and that's probably true. But at the same time, it's like it's the same. I'm conflicted because like you read the Libra white paper, and it's like they're talking about the same thing, like giving financial services to the world. Like you guys, like, all right, maybe I can get behind that. Everything else you're doing, nah. But it's definitely an exciting time. I think what's important right now is that the space, like you said, is maturing, becoming more professional, and we're still experimenting and building. So it's cool to see. So, anyways,
Nice. Doc, what about you?
Oh, I'm just a trader, man. That's what I do. So I'm not a user. I'm just a trader. Don't own anything other than Bitcoin for any length of time.
Nice. And have you used the Bitcoin Lightning Network?
Not myself.
we just opened up a StakeNet Lightning node. So I'm
You're playing
playing with that. I don't want to talk about it because I'm like still a novice on it, but it's cool. It's definitely like layer 2, cool stuff.
Yeah,
we'll see. But
it's useful for some things. Like yesterday, there's a lady on Twitter I follow, Catherine Wu, and she's always got like she's a lawyer. She's got always like amazing insights into when this big regulatory stuff comes up, and she's got her little tip thing up there, and you can tip her with Lightning Network. So it's like, yeah, just send it over. Boom. It's like that. Like 1 second, it's done. And and the fees are virtually non-existent. And it's really good for sending this small amounts of money. So get in there, get Lightning, get some wallets set up and play. It's fun. Anyway, guys, thank you so much for coming on today. It's been a super, super interesting chat. And again, anybody who wants to check out the newsletter or just follow them over on YouTube and get some great insights there as well, you'll find those links down below. So Mav Doc, thank you guys so much for coming on.
Thank you,
Thanks, Lark.
Cheers.